Welcome to the final episode of Limitless Trading for this week. We wanted to just touch base with you regarding what we saw, what we missed, what we plan to do in the future. Congratulations if you caught the reversal that we called last Thursday at 55.31. It turned out to be a fantastic long with a little bitty short that nobody was looking at for Tuesday. So what we said was if 55.31 held on Thursday and we got a couple of trend days, the trend was going to continue. And we said if 57.27 rejected, which it did on Tuesday morning, we caught one long short Tuesday. And we said, hey, we're going to go risk on for FOMC. Why? Because all the levels were holding. What does that tell us? That the market makers, while the daily is on a bearish divergence, the RSI is oversold. And just like last year, Powell was going to calm the markets. He was probably not going to cut rates, but he would signal that he feels strong about the economy, so on and so forth, and counter all this tariff talk and everything about POTUS. Remember, we don't trade the news. We look at the trend lines. We look at the levels, and the levels were holding. If it would have rejected, it would have been a different story. Now, what do? We're 3 levels up and we're breaking out. What did we say? Every level that you break out, you can risk on. At 55.31, we told everybody last week, you could risk on to 56.37. Take a little off the table. If 56.37 held and breaks out, risk on to 57.27. Now Thursday comes, FOMC is over. We've had this wonderful overreaction and 57.27 is holding. So what's the next level? Well, we're looking at 58.13, 58.55, all the way up to 59.29, which is almost a replica of this last summer's. Actually, it was an head and shoulder back then. This is more like a bear flag that is squeezing because, again, we are oversold. The market makers have to cover. We're going to probably cover some of this. They don't have to cover all of it, but if you missed out, what we would say is sit on hands. 2 things you can do. At 57.27 on Thursday, defense, or again, Thursdays tend to be a low. Let's say the market says, all right, we're going to take some profits. At 56.37 defense, we're still in a bullish uptrend. At least you can get a second chance at 57.27. If 57.27 breaks out, you can risk on, but an incredibly tight stop loss because we could easily break, come down 2 levels, come down 1. There's no rule that says that we have to finish OPEX bullish. The market can go up, can go down, can go sideways, or could just chop around and build more consensus. But if you miss some trades and you have the itch, if you see 57.27 hold, risk on tight. Let her drag herself till Friday all the way to 58.13, 58.55, barring no crazy bad news. If she rejects it, 57.27 rejects and actually puts in a red candle, take your short for Thursday. Anywhere in here is fine. I always say stop loss is your friend. Don't assume we're going to immediately go down. Don't assume we're going to immediately go up. Some of this is just chop. Now the market, it does what? It just chops around. It has news. It probably does continuation, but don't assume that we have to go straight up. Now, on the smaller time frame, same thing. We're hitting our head on 57.54 for the overnight. We hit our head at 57.71, which was a little higher than the prior resistance on Tuesday, but the market liked what it heard. We would say on the smaller time frame, again, if we get a little bit of a cool down to 57.27 in the morning session, because we're getting a little bit of a bearish divergence coming in, you say, hey, wait a minute, it held. Okay, risk on slightly going up. But remember, we started all the way back here at 55.31. So you're buying at resistance again. Let it break out. Let it show you that it's defending itself to continue the trend all the way to finish the week into OPEX. There's nothing that says it can't reject here. There's nothing that says that this has to hold. But if 57.27, 57.25 on the smaller time frame fails, take your short. If you miss something, you want a little action to 56.97, maybe 56.68, so on and so forth, and walk her back down. There might be some sort of news. The job report might be bearish to counter, what Powell said today to calm the markets. But don't assume. If you're going to counter trend, this bull trend, keep your stop losses tight. Doesn't mean that you're going to be wrong, but your counter trading trends. I've had people say, well, I could have made money. Everybody's a genius in hindsight. If it continues to defend this area, go ahead and risk on. If it doesn't do anything and if it chops around, there is zero for you to do for the rest of the week. There's again 80% probability that next Tuesday we get another low. Now on the daily, is that low a retest of 57.27? Is that low, some crazy news about tariffs or something going on in the homeland, 56.37, all the way back down? No one knows. No one's crystal ball is that good, and ours is 90%. Let the 15-minute tell you the smaller time frame what she's doing. Frankly, let her come home. Let her at least defend 57.27 before you go risk on, because I know what people are saying, well, it's breaking, I'm going to miss out, right? And if you start catching along here and you miss out, and then it goes here, and then it goes here, what are you going to do? Let the level, what I tell my guys is set an alert. If 57.27 dings on your screen, you execute. If 58.13 dings on your screen, you look at it. Hey, is this turning into resistance, which is what happened last summer here? Let the levels do what they got to do. We're in no man's land. Yes, we're in a little bit of a resistance here at 57.68. But look at what happened. Everybody shorted on Tuesday thinking, oh, the run is over on that red countdown. We squeezed as we anticipated. Again, trend is your friend. The trend is up. That means any defending of support on a very low RSI, we're going up. I personally am telling everybody, I want 58, 58.5. I want 59.20. I want everybody to tell me the bottom is in so we can short her down again. But we are bullish into CPI. So what I suspect is we might, again, consolidate here. Powell didn't say anything bad. Again, we might have some job news and OPEX, a lot of contracts expire. But if we're up here, in the nosebleed section by CPI and it's priced in, we're going to risk on some shorts because, again, POTUS has said something about tariffs and October 2nd. Plus, forget about the news. Typically speaking, market makers roll off their books, all their profits into tax season because they don't pay taxes with their money. They pay taxes with the money they made off the market. So we're going to roll down for tax season, and then we'll start our summer run. But the key is don't push buttons if you don't have to. If you did well, good. You're done for the week. If you want to risk on a little bit, let the level hold, break down, or break out. No one has a crystal ball. Everybody's bullish. Everybody's bearish. It's fear. It's not fear. Again, we're oversold and we're on fear. What does that tell me? We're going to keep going until we get greed. And that's when we want to take our puts. When no one's looking, when everybody's super bullish, this is when we got this push. When people were telling us here at this level that it was 5,100 on the previous contract. Oh, we're going to go higher. And I know we're going to go higher. I have dark pools up here and I have dark pools down there. You don't have to tell me that we're going to go beyond 6,600, and we're also going to come down to 5,700. The when, the where, only two people in the world know, and they're inside traders. Don't execute if there's nothing to do. If you'd like the content, please subscribe. Hit the like button and comment below if you want to join our Discord. Good luck.